Welcome back. What is driving companies like BMO Capital to reassess their gold prices and their predictions for 2026 from, say, 3,900 to 4,400 an ounce? Why is India experiencing a surge in gold and silver imports despite the record high prices? And what does this mean for global demand? Also, remember silver? Remember what we told you? I'm Eric Sapanik. This is Steve Rand, and this is the Gold Spot. Okay, so let's dive into this. BMO Capital, they are changing their projections from 3,900 at the end of 2025 to, looking at the beginning of 2026, they're thinking now 4,400. This obviously because, well, we pre-record this show, and as we sit here right now, we're right at 3,900 per ounce. It seems like every single time we do this show, we're up another $100, and that's week to week. So we're on a heck of a trajectory right now. Big reason. Why? Why is this all happening? You've heard us talking about this. You've heard us talking about central banks buying this. But the real concern lies right now, not only in foreign debt, because that's a big issue worldwide, but also the United States government debt, being the multi-trillion dollar debt that we have. Now let's talk about what just happened. Last night, the Congress decided that we're going to shut down the government. Have to shut it down. We just don't have enough money to keep it running. Even though we had the bigger, better bill, which increased our actual spending level to levels never seen before, over $5 trillion over a 2-year span of time. That's not enough money. We need another 1.5 trillion for all these different things, and we're going to shut down the government unless we get it. So basically now we have a standoff between Democrats and Republicans willing to go to work or not, based off of trying to hold them basically hostage for more money. This is insane numbers that we're talking about. And this is what the central banks, the sovereign banks, are all paying attention to. And the reason why gold is continuing to come in. Now, there's some other forecasters out there that perhaps in the beginning we thought were a little bit crazy with the projections that they were given. But now it seems as though they were right. And Steve, maybe you can talk a little bit about that.
Yeah, we're seeing some very interesting numbers. Steve Hanke, who's the chief of economics for Johns Hopkins University, is saying $6,000 gold. But Forbes is now saying that we could see $7,000 gold in the very near future. Robert Kiyosaki, who we all know of, is saying he sees gold going to $25,000 an ounce. And a lot of this, again, may seem like unrealistic to many of you, but remember, we're also hearing a lot about potentially Donald Trump going back and doing a gold reevaluation, which seems to be very much on the table, and that could make gold prices go to much higher numbers than anybody really can comprehend in the scheme of what we normally see out here.
I mean, yeah, just think about it. Let's just take the debt by itself. Let's say we're almost at 38 trillion now. We have a little over 8,000 metric tons of gold. Well, how does that break down per ounce? I mean, those are some big numbers. And if you were trying to reevaluate and actually put a gold standard to what our currency debasement is at this point in time, 25,000 an ounce doesn't seem so unreasonable anymore. I've got another question for you though. India right now, all of a sudden we are seeing their demand go through the roof. And it's not unlikely because there's a holiday right now, I believe, and maybe you can go ahead and tell us a little something about the October holiday and how this is affecting our markets.
Yeah, well, again, India is one of the BRICS nations that's been accumulating gold at massive pace for the last several years. So that's not something that's totally new. They've been accumulating a lot. But this month we see the Festival of Lights called Diwali, where there's a tremendous amount of influx of gold going into people. They're buying on auspicious days where it's a tradition in their culture to do this. And I know every year when this happens, we see an influx of customers that come in and buy physical gold from us. So now that we're seeing gold prices move as much, the concern about sovereign debt is getting so large, that's amped up, and I'm getting phone calls daily. Are you going to have gold available? Are you going to have it for us to be able to come in and pick up? Way more than I've seen in the past. And I think that's just an indication of what we're seeing because, again, the gold prices are surging and they recognize that this is something that they need to accumulate because there's only so much supply to go around.
Right. And you know, the other interesting thing is there's actual premiums happening right now, what's being reported, like 8% premiums in order to actually acquire the gold. Whereas though countries like here, I mean, you're relatively close to gold spot prices. Our premiums are still low, low, low because the price is so high. Same thing in China. But with India, we're seeing a surge in action because the public is the one grabbing that demand. So that might be something that our listeners and viewers might want to take that advice. And if you are thinking about buying more, I mean, right now is a good time to do it because the premium ain't there.
And keep in mind that, here in this country, it's not the general public that's buying gold. It's overseas buying, like we're seeing in India and other parts of the world, the BRICS nations especially, that are buying up massive amounts of gold. But once that happens here in the United States, once the public in the United States starts to buy into what's going on and recognizing how big the problems are, that's when you're going to see those premiums surge. That's when you're going to see the lack of availability. And that's when you're going to see things get back to what we've seen in the past in bull markets that we haven't yet seen. So it's certainly not too late to be buying your physical metal now.
I couldn't agree more. Another thing that we're going to talk about right now is going to be what's going on with silver. And it's funny because we actually kind of talked about this, and we're going to cut in a little video here so that you can see what we were talking about back in, it was the beginning of the year, I think it was like February, something like that, but we're going to roll the tape so you can see what we talked about. Today, we're looking at one of the largest spreads I've seen. John, can you tell them what the spread is right now?
Right now, the spread is 91 to 1, and it's a tool that you can use if you look at it in the right way.
One thing that I love to talk about is that silver to gold ratio, because it's something that, first of all, like to reiterate what I talked about back then, 15 to 1 was something that was government mandated, not a free market. That is not a realistic number to look at. But looking at how far that spread starts to happen is always something that can help you kind of judge what's going to go on in the future. That's one of the things that we were using and why we've been 100% right up until today on how silver has been moving. The supply and demand issue is one of the big deals, but the other one is how far its big sister gold is going. Now, parabolically, we're watching both gold and silver move. Now, we have seen silver, even though it's chasing gold, still start to catch up. Okay, so if you go back to like COVID was the largest we've seen. It was like 126 to 1. Then in the beginning of this year, we were 91 to 1. Now, 81 to 1. So we're watching this gap start to close. Now, we are right now, as we are filming this, $47 and change this morning. We know we're going to break the all-time high, which is just below $50 per ounce. And we are telling you right now, we are going to exceed that. And there's a good chance it might be off to the races at that point in time. See, even back in 2011, when we hit that 49, it was just immediately artificially depressed by the bigger banks that were doing things that actually found themselves in court and actually became, well, let's just say they got slapped on the wrist real hard for a couple of it. I don't think that'll persuade them from doing it again. It's just the fact that the ETF contracts, as Tim has talked about here, there's been so much of that actual physical metal that's been taken out of those depositories, and the leverage is no longer what it used to be. So we can very much see silver prices. I mean, we're bullish. That's all there is to it. Gold, bullish. Silver, bullish. Platinum, bullish across the board. Now, Steve, I know there's a couple more things we want to close out on here.
Yeah, if you go back and you look at Germany after World War I, a lot of people reference this. You hear about, somebody taking a wheelbarrow full of marks to the market to get a loaf of bread. And that's a real thing that happened. And it's happened in other countries as well, like Zimbabwe and in Central or South America a few times as well. But we want to look at that because we want to have an understanding of what's happening right now. Our dollar is depreciating in value at a rapid rate. Our cost of living is going up because our dollar just doesn't buy us as much as it used to. And that's of a lot of things. But as it pertains to gold in Germany at the end of World War I, they went through a massive period of hyperinflation. We're not there yet, but we're headed in a trajectory that looks very, very similar and could get to crazy levels. So to give you some idea, some perspective on this, in 1919 in Germany, it cost 170 German marks to buy about a month's worth of groceries or 1 ounce of gold. If you fast forward just 4 years to 1923, to buy that same month's worth of groceries or that same ounce of gold, it went from 170 to 87 trillion marks to buy the same ounce of gold. So when somebody says that the price of gold can't go there, You don't know what it can do because you don't know what the future is going to look like, but the direction this debt is going, it's going to go in a very poor direction. We can say that for sure.
We're not saying that the dollar is going to unravel tomorrow, but you cannot watch what's going on right now. You cannot watch our debts. You cannot watch our government's behaviors and not be somewhat concerned unless you're just not paying attention. Because, I mean, think about it. The reason why Elon Musk was a part of the Trump campaign was because one reason alone, he's concerned about the debt. Jamie Dimon of Chase Bank, he's another whistleblower that kept said, our national debt is the most predictable catastrophe in world history. And the naysayers come out and say, nah, it's not a problem. It is a problem. And that's the reason why you're seeing what's happening right now with metals prices. And it's the reason why you need to be on the defensive when it comes to the future of your portfolio. And Steve, what about Morgan Stanley?
Well, again, most of these companies, financial advisors in general, most of them don't like gold. They don't work in that market. They don't see it. They kind of drink their own Kool-Aid to some extent, thinking that your whole portfolio should be stocks and bonds. And Morgan Stanley has just recently come out, one of the biggest banks in the country, saying that gold should now be 20% of your portfolio. Now, that's something that we don't generally hear from these groups, but we also know that these companies have been underestimating gold prices for years, and their projections have been off, and now they're way too conservative. So think about what's happening, but a big bank like that saying that that you should have a lot more gold in your portfolio is a big deal, because again, they don't want to be wrong all the time.
Steve, very good insight, and we're going to see you next week right here on the Gold Spot.
If you enjoyed today's Gold Spot, like or subscribe to both our YouTube and Rumble channels. Also, comment below if you have any questions or if you'd like to hear us talk about a specific topic in a future video.